Welcome back, everyone, to Equity Development. My name is Paul Hill, and by popular demand, I am delighted today to be able to speak to Serena Lang, Exec Chairman, and Jonathan Hunter, CEO of Eleco, a leading build tech software firm that helps landlords, property developers, and contractors design, construct, and managing their buildings over their sort of 75-year lives. So, welcome, guys.
Morning, Paul.
Good morning.
Big congrats on this morning's resilient 2020 results and positive start to the year, particularly against quite challenging comps from last year pre-COVID. So well done there. But before we sort of unpack the details, Jonathan, I don't suppose you could quickly just walk us through a real life example of how the software is used in the field by customers.
Sure. Yes, our software plays a key part in the industry because we provide our customers with certainty to make better decisions. And one of the projects that we've been involved in 2020 is working with a number of other software vendors and one of our core customers to deliver a control room to allow, gone are the days of putting post-it notes on the wall in a construction site. There's a dashboard with a 3D model, and you can see exactly what's happening on site, and all the planning data and project information is being driven from our Power Project planning solution combined with Power Project Vision, our cloud collaboration system.
And how complex is this? I mean, how many people would be feeding information in real time to keep everybody informed? Just to give an indication of sort of investors of how much data and sort of complexity it's handling.
Yes, well, there's a number of parties that are involved in any construction project. Obviously, the size of the project, there's more information being fed in. But there's architectural information. There's obviously the 3D model, which is updated in real time, so you can see that progress on site. There's information from the plan, from cost estimates. It can be site data as well feeding in. So when deliveries are arriving, weather information, the ability to operate cranes in different wind and weather conditions. So there's a lot of information coming in, and then regular updates on site having to flow through. So it's quite a significant amount of data being consolidated and viewed.
Right. Marvelous. Serena, so how big is the build tech market, and sort of like how fast is it growing, and sort of like what are the key growth drivers?
Yeah, well, I mean, building technology, Paul, is entering a new era thanks to smart technologies, software, Internet of Things and robotics. And apart from Asia, a little bit in the US, until now, really, the market's seen little growth. But overall, the building technology market's huge. If I look at the market for our own best-of-breed software within the building lifecycle, that in and of itself is about 8 billion. We have an 8 to 15 compound annual growth rate, which certainly provides a compelling opportunity for Eleco. The drivers for this are a mix of rising material costs, increased regulation, labour shortages. That's all squeezing the margins. There's the drive for better operational efficiencies as a result, increased collaboration and data sharing, BIM sort of really driving that quite significantly. And of course, the pandemic. I mean, we've had a change in working practices prompted by that. And that means that technologies such as ours, which help improve the margins through the automation, provision of data, are becoming more critical to our existing and potential customers than ever before.
And do you think that sort of COVID long term is actually going to be a net benefit, basically a benefit, a favourable force for build tech, sort of like in accelerating that whole digitalisation of the industry?
Absolutely, Paul. I mean, it really has been that sort of catalyst for change, I think, and it is, it was on the cards, but I think the acceleration in the market definitely is a result of COVID and the fact that everyone's changing working ways now.
Yeah, and I understand. I mean, I saw a sort of slide from one of your rivals, Nemenschek, saying that the penetration rate of digitization within the industry is much lower than anywhere else in all the other industries. So there's a big sort of like catch up, isn't there, apparently in the construction area?
Absolutely. I mean, I come from, at one point in my life, from oil and gas. And in fact, the way that we did construction projects then is, further advanced than some companies are doing it today. So there is a huge catch up in terms of the use of technology, and that was driven by margins, really. Obviously oil and gas margins were significantly higher. They could use more technology, but now actually the adoption of these technologies is critical to improving their margins.
Yeah, and again, I point people to that presentation because effectively there's more than 50% sort of like penetration to go. It's less than 40%, I think it is. Yeah. Now, Jonathan, just in terms of the sort of the savings that people can make, I saw a statistic, something like this, at least 20% waste whenever you have a product. I mean, I thought that was quite good because when you look at the Crossrail and HS2, it's just down here. I mean, that's just been a total money sort of fire recently. So what typically will people save in terms of sort of like, timing and then improvements in quality and improvements in sort of like, costs, etc.?
Yeah, well, they say, failing to plan is planning to fail. And, that's where our tools really play a key role, that if there is a delay or an overrun, then there's obviously, it has a negative impact. So really it's about providing certainty and delivering, on time, but also now more so in a sustainable and safe way as well, especially with COVID. There's a lot of health and safety practices that need to be implemented and have been implemented. But really, the benefit is quite, it's immense and quite difficult to measure. Some of our clients, at different scales will see different results. And one client in particular quoted a saving of £20,000 per year per store. So that was a retail customer. But really it's around providing certainty, so to avoid any overruns and be able to budget and manage cash on a construction site.
Yeah, I mean, I'd point, there's a bit of a market stat that I picked up that the worldwide infrastructure market is worth about $10 trillion. And if you save 20%, which is some modest amount, that's $2 trillion per year. So it's an amazing amount of money that these type of build tech software can save. Now, Serena, can you just quickly walk us through then the sort of resilience of the 2020 results and the positive start? Because I mean, frankly, a 4% increase in the first 2 months is a really, really encouraging number, given that it was compared against pre-COVID levels.
That's right, Paul. I mean, Eleco demonstrated great resilience during the pandemic, with revenues year on year constant at 25 million, despite that upheaval experienced by our customers. Our incurring revenues increased to 56% from 53 in 2019. Profit before tax was up 12% to 3.9 million. And we had extremely strong cash generation during the year, such as our net cash position improved from 1.1 million at 31st of December 2019 to 6.2 at 31st of December 2020. So, that put us in a really strong position at the end of the year from which to implement on a new strategy and grow our business. And I think we've got a number of key drivers there, strong customer relationships, and we have a very strong management team. And I think those things, will help us with our strategy to begin to bear the fruit over the next 12 months. And we've seen that strong start, as you said, first 2 months up 4%. We're really pleased to date.
And what are the sort of the retention rates? Is it sort of 90%? Because it's a repeat customers.
Not 95% our customer retention rate. So it's very strong.
Yeah, and they've got quite a large overseas exposure as well, isn't there? Sort of like it's sort of like I sort of came out 38% in the UK, and the rest is overseas.
Yeah, we've got about, that's right. Yeah,
and where overseas?
Yeah, our core markets are the Nordics and Germany outside the UK, and then we've got a foothold now in the US, which we're planning on growing, and we've got places in Belgium, Netherlands, and Australia. So it's expanding throughout Europe and really gaining strength in those core markets.
Yeah, well, you mentioned obviously the USPs for the the company, the customers, and the products and stuff. You just now, because you revealed as well, which was like, I know Jonathan sort of whetted my interest 2 months ago in the strategy. Can you just give us a bit of flavour on how you see the sort of the strategy going forward and how you've changed that?
Yeah, I mean, as you can see, we've an extremely attractive market, and there are already, as you know, some really strong players in that market. So we've recognised that those opportunities mean that there are going to be disruptive technologies, well-funded startups coming to the fore, And our peer group themselves are heavily investing more across the building life cycle rather than being focused in their own niches. So, we felt it critical last year to undertake a really in-depth review of both those external trends. So what are the product technologies, customer requirements, and the new competitive landscape. So we really knew where we could play, as well as testing the centrally held beliefs about our internal capabilities. So, what does the new strategy look like? Well, we've got 4 pillars, and it's built around accelerating organic growth as well as proactively targeting M&A and partnership opportunities. So the first pillar, focus. We are playing in a market that it has very, very large players in it. And we've spoken to our customers and what they're looking for, and what we've identified is they do not want a player that offers them an end-to-end integrated solution at a technical level. And therefore, we can really focus on those products that we've got where we're best of breed and really enhance those and get adjacencies around that. We're also going to focus the number of products that we have. So we have a very large portfolio, all of which are very good in their own specific markets. But if we take, for example, our development spend, and we focus that on a smaller number of products, we're going to get much better return for those best of breed products that we have. We've also identified very key customer segments, and they're the segments that we'll play in. And of course, very importantly, geographies. So we will be expanding geographically, but in specific regions. As an example, we're going to put a real focus into the US, but that focus in the US will be initially in one state, so that we can get all the branding and the sales resources concentrated to really drive that growth. We'll be simplifying our product offering. So that's just the first step. So leg number 1, focus. Number 2, align around our customer segments. So we're going to transition Eleco from being a product-led company to a customer-centric, nimble organization. Why are we going to do that? Well, we need the organizational agility. We need to increase the speed and the agility in terms of customer-facing interaction, in terms of product development, as well as product launches, because we know there's going to be lots of new companies coming out with new technologies, and we'll lead the new generation of users in our target segments. I mean, one of the things, we know is that we've got this really, really core strengths. So we'll capitalize, leg 3, capitalize on the strengths we have. Let's take Power Project. That is a product that has been built up year upon year upon year with input from really, really close customer relationships. So it's a product that can't actually be duplicated by someone else. It's very sticky because it gives our users exactly what they want. And as I say, it's been developed over time. So it'd be very difficult for a new market entrant to come in and take that. But what they could do is come in and develop something that overlays it. And we'll be ensuring that actually we're the ones driving those markets, that customer segment, based on, that customer-centric view.
Yeah. And Jonathan, just in terms of the sort of customer-centric view, I understand you've split the business into sort of like 2 areas. You've got your build sort of like life cycle planning and management, and then you've got a visualization and CAD side. Can you just quickly take us through that and just the relative size? I think it's about 75%, 25% in terms of turnover, or that sort of split?
Yes, yeah, that's about right. And the purpose of that is really with the thorough review we carried out last year, we identified the synergies in our building life cycle and the opportunities to sell a number of products into core customer segments. So therefore, it really made sense that we group those products and we really focus on the building life cycle products as a portfolio. And what will come from that is aligning the product roadmaps and the product strategies as a building life cycle. Then on the other side, we have our CAD and visualization software, which is quite niche, and those products will be given focus on their niche areas. We didn't see any opportunity to sell those or offer those products into our building lifecycle customer segments.
Which customers, Jonathan, do they sell into? Is it sort of soft furnishing and sort of like flooring customers?
That's right. Yeah, soft furnishing, flooring, stair manufacturers, timber frame manufacturers. So there's quite specialist tools that we offer that are really critical for that sector, and they do very well. But you know, it's quite a different niche area of the market.
Yeah, and then on that building sort of life cycle stuff, is it correct in sort of investors thinking that effectively you've got sort of your design and your architect guys who put all the drawings and put all the plans together, then he gives it to the contractor who then builds it according to that, and then the final bit is the landlord, and then he can then now with your software take all of those plans, and if you could just take us through, maintain those assets according to those plans, because he's got all the drawings, he knows exactly what's been built, by which material, where it is, when it needs to be, you know, maintained. Can you just, is that correct? Can you just give us a bit of colour on that? That sort of like that 75-year sort of lifespan, because it seems an enormous opportunity.
Yes, yeah. We service, as you know, we service different stages of the building life cycle, from pre-construction through construction, and then the post-construction and maintenance. So that's correct. And we also have in the maintenance side a strong customer base that are maintaining assets within manufacturing plants, and that really, you know, we've got a really strong market share there in the UK, but it also extends out into facilities maintenance. So we have some you know, NHS customers, for example, schools, hotels, etc. So there's quite a broad base there in relation to maintenance. If we look at our Icon system, which is used by 7 of the top 10 UK retailers, the retailers are really focused on the construction or the refit out of retail stores, you know, food and non-food retail stores. So, you know, they're getting closer to the construction and the architectural design and all the standards which our software is hosting and allowing them to manage. And obviously those stores need to be maintained. So the same data set can be, the assets within that data set can be maintained as well through the same system.
So the software basically has got a blueprint that it can then lift and shift to the landlord at the end of the project, and he can then knows exactly how it's been built and how to operate it and stuff. Just on Serena, just with the tech, with basically the US, is it, as I understand, is it Texas you're sort of like using as your beachhead for your direct sales? Why Texas rather than sort of, I don't know, Silicon Valley or something?
Yeah, well, I mean, Texas has quite a large amount of infrastructure projects going on. It's got quite a lot of the US building companies there. So it's a quite core, and of course, you know, there's a lot going on. So, you know, when we looked at the various markets, it felt like a really strong one to start in. And we've already got the reseller relationships there for the bigger deals as well.
And what about elsewhere in the world? Because I mean, you've got a really strong position in the UK and Northern Europe, in the Nordics in particular. But there's obviously lots of other opportunities in Australia and emerging markets. And as you say, the US is still, what, less than 5% of your turnover. That internationalisation, how do you see that? Is that sort of lifting and shifting best-in-class products into those and using a combination of channel partners as well as your own direct sales?
You know, one of the things we'll do, for example, is take Shire and put that into Germany. So, you know, that really allows us to drive a product that we already know well into a market where we're already present and we've got a team people there. You know, so we'll sort of take it one step at a time. You know, we're going to go low hanging fruit first and really push that forward. The opportunities are huge. I think the important thing for Eleco, given the size we are, is to keep those really, really focused and drived and put the amount of resources behind it so that we can ensure success.
Okay, good. And just on the sort of the M&A strategy, I know you touched on it. How does that sort of dovetail into the organic growth strategy? I mean, what are you looking to buy? I mean, you mentioned you've got over £6 million of cash, which is a credit during that in the pandemic. What are you looking to spend it on, and where is it? Is it more distribution? Is it technology? Is it what are you looking to really concentrate on?
Yeah. Well, like the rest of our M&A, like the rest of our strategy, our M&A strategy was based around our 4 pillars. So very focused, aligned around our core customer segments, targeting the specific geographies that we're looking at, and new adjacent technologies with the models that drive recurring revenue. So, you know, we've identified the areas that we can play in and win versus the competition, and that's where we're going to go. I mean, I think it's going to be interesting because there's going to be an ever increasing interdependence between the players in the value chain with the increased use of collaboration tools and BIM and data analytics to drive better decisions.
Okay, and then sort of like sort of some hot spots in property. I mean, you know, you haven't got to be Einstein, and I'm a bit of an idiot at times, but even I know that sort of data centers and smart factories and online warehouses and even build to rent, they're all going up like sort of like, you know, like nothing at the moment. So, you know, they're huge increases. I think the data centers, I think we're up 70% last year in the US, and likewise online warehouses in the UK were up 60%. So, Jonathan, how do you see that sort of accessing that market? Have you got any reference sites at any of those that you could perhaps lift and shift or bolster the technology, etc.?
Yeah, well, any project, any planning project with a start and end require, you know, our software can be used for not only the planning but the estimating as well, and then the data around that as well. So we do have some examples. You know, our direct clients work on projects. You know, those sorts of projects in Germany. One of our largest clients actually manufactures automated factories, and you know, we've worked with them to do some amazing things with our software to implement some automation. So yes, certainly a trend, but it's you know, every trend or construction trend, in, you know, even house building infrastructure, we're you know, our customers are involved. So really the product is very flexible in that sense to meet the needs of any project.
And I guess overall in the market, I mean, Serena, you know perhaps better than I, but there's going to be a huge amount of infrastructure spending. In fact, I think Joe Biden's come into office and he hasn't yet put a number on it, but it's sort of like anywhere between $1 trillion and $2 trillion that he's going to be spending in a bill. I mean, this should be infrastructure should be perfect, you know, to Eleco, I guess.
Yeah, we've got.
Sorry, Jonathan, go ahead.
I mean, in the US, we acquired PennDOT, you know, Pennsylvania Department of Transport, that exclusively use our planning tool to manage all their infrastructure road projects across the state. And the system we developed for them a number of years ago has evolved into a, you know, Power Project Vision, which is a collaboration tool to share data and manage a number of projects. You know, so it's really, during COVID, we've seen a lot more interest, and, you know, this control room project I mentioned earlier, it's really, you know, plays into where we're heading in our strategy. It's around collaboration, around data connecting together, not necessarily integrating, but through API connections, which are, you know, which is what the market is really looking for. So that opens us up for working with other software vendors in strategic partnerships to deliver better solutions for our core customers.
Yeah,
really the strategy, you know, our focus in the strategy is also building on our customer relationships and really leveraging and monetizing those relationships with further, you know, solutions and services that meet their needs and their future needs.
Yeah, and Serena, just on the strategy, obviously, you know, the financials are starting to come through quite nicely, which is fantastic. But just in terms of the first 100 days, 200 days, how are you going to gauge, sort of like with KPIs or just sort of like anecdotal evidence that the strategy is working at the coalface with customers? I mean, are they delighted, or what's their reaction?
Well, we're getting a lot of positive feedback internally. Obviously, we're only just starting to launch the strategy now externally. So, you know, the customers that we spoke to ahead of this, you know, are really excited. And I think for us, you know, what we've done is we've taken this down a level, and we have very specific programs of work that we're doing. So along the way, we'll be able to sort of see exactly where we are against this as we move forward.
Okay, and I understand you're hiring a few people as well, just sort of extra sort of like resource. Can you just take us quickly through that, sort of like the first line structure?
Yeah, I mean, the key for us really is to make sure that we've got that customer centricity. So we've got a chief product officer that we're appointing, which is really important to us, making sure that we've got that agility in the organization around the customer facing angle. We're appointing a chief technology officer, and the core there is to make sure that the spend that we have in R&D, which has been relatively constant as it happens, but it's really spent in those areas that we know is going to get the most acceleration in our growth. And then we've got an HR person that's already been appointed, and that is about really changing the culture, making sure we've got a culture of innovation and growth, and driving that across, and a culture of one Elecosoft in the building life cycle. So structurally we've had these siloed organizations, and we're going to move very much to a place where we've got one company for building life cycle in each geography, and that will allow us to drive those back office efficiencies, but also it will take away the historic blockers, I guess, for the selling the cluster rather than just selling the individual products.
And when you do that, when the success is, say, I don't know, 3-5 years time, it's organic growth rates. Are you hoping to sort of get to sort of market, sort of like organic growth of 10%? Is that the sort of the indication?
Our aspiration is to have organic growth rates that are in line with our peer group, and then when you overlay the M&A strategy on top of that, I think it looks exceptionally compelling.
Great. Yeah, and then for the rest of this year, sort of news flow. I mean, obviously you started off pretty quickly with your sort of final results and your strategy. I mean, you sort of like you've got a hard act to follow, I suppose. But just for investors, how do you see the sort of the rest of the year sort of shaping up in terms of news flow?
Jonathan.
Yes, well, we'll announce a number of appointments. We also have some exciting technology releases coming out in the rest of the year. We have the next version of Power Project, which will be very exciting. We're putting some features in there for the US, which is great. And last year we actually released some minimum viable products of our next generation solutions. So we'll continue to enhance and build on those. Next generation AI visualization tool, visualizing walls. We launched the floor visualization last year, and that was very well received. And the next version is to visualize walls. And then also, I'm really excited to say that we're launching a new website for our customer-facing, business. So elecosoft.com will go live, and that's been completely revamped with an e-commerce store. So that's really core to our marketing efforts and our communication internationally. So very excited about that. And then we will be providing updates on the strategy as the year progresses.
Good.
Yeah, and that's sort of, as we said, so that's including launching SHA into Germany. We're going to launch direct in the US as well. So we've got our reseller community at the moment, and they're very much, we work very closely with those to look at enterprise deals. But the smaller, medium-sized contractors will be going direct in the same way we do in the UK.
Brilliant. And as a request for sort of investors, could you give, when it comes to sort of like the AGM or whatever, just as an update on how the reception of customers, whether you're cross-selling, whether you're sort of like winning new businesses? I know there might be small deals, but aggregate them, or the internationalisation, because you've got such a fantastic sort of like model in Northern Europe and the UK. There should be no reason why you can't replicate that abroad, and anything to rubber stamp how the strategy is really hitting customers there in the field would be brilliant. Again, I mean, just a sort of for investors, sort of top level. I mean, I'm an equity analyst, etc. And in terms of sort of if Eleco can hit sort of its growth rates, I mean, I have a modest valuation of £1.30 for the shares at the moment, but frankly, in 2 to 3, 4 years, etc., if the business can do double digits or 10% per annum, it should be no reason why it can't trade at 5 times sales, which would be well over £2, given that the competition trade at around about 8 or 9 times sales. So there's a big sort of like opportunity there, no doubt about it. Anyway, thanks very much, guys, for your time, and really looking forward to hearing the trading update in the AGM.
Super, great. Thanks, Paul.
Thanks, guys.
Thank you, Paul.